Hey, happy Monday, everybody. So, nice chippy start to the week for the market. A little bit of a rally there. Tesla got off to a fast start. We'll talk about Tesla in a second. But the market looks like maybe it's breaking out of this sideways pattern it's been in the last couple of weeks. You kind of see it in the charts. The S&P definitely is breaking into a bull leg. And the Dow's pretty strong right now, right? Both of them are hitting all-time highs. The Nasdaq still kind of stuck in that. It's kind of pushing the top of that channel. It looks like it wants to get over it, but we'll look at a chart in a second. I'll show you what I'm talking about. That's why we got the Nasdaq on the screen. Anyways, Tesla, right? Tesla had big news, big earnings, whatever, about 182,000 cars delivered this quarter. Uh, there's car dealerships that put out that much. And here's the thing with Tesla, guys. And this kind of leads into a little tip for you guys today. The thing with Tesla is the biggest fear for Tesla, and nobody ever talks about this, is that Tesla's always been the most innovative and the most technologically advanced, right, of all your electric vehicle makers. Now, you have other specific niche players in the arena, right, like your Neos and stuff like that. Interesting plays, right? Interesting companies, young companies, developing companies. Well, Tesla's getting a little longer on tooth now. But here's the thing, guys. Like I said, they've always been ahead on innovation. They've always been ahead on technology, but you're starting to see a turn in that. And what you're starting to see is these mass production automakers. Volkswagen, right? Volkswagen changed their name to Volkswagen. Shows where their focus is. GM, right? GM just, we saw over the weekend, GM released its Hummer. It's an amazing looking car. It's going to be selling for about $110,000, and they'll probably sell 182,000 of these a month. Here's the thing that Tesla loses. Once that technology and that innovation gap closes between Tesla and your traditional car makers is, what happens? Well, now it becomes about branding. It becomes about name recognition. It becomes about things like brand loyalty, like Ford, GM, Chevy. They have people that have, through generations, buy their cars and their cars only. Tesla doesn't really have that right now, right? It's a darling of the whole progressive save the planet movement. But at some point, the rubber hits the road with that. And you could kind of see it with Tesla this morning, right? It popped up over 700, which is kind of that inflection point for it right now on the chart. And it just gave it right back. It's still up, but it's just having trouble at that 700 level. Let me share my screen. We'll pop on over to CNBC and take a look what they're talking about. And you can see, let's see if we can, there you go. Tesla shares jumped 6%. Now they've changed this number, CNBC. CNBC likes to chase this. I don't know. That's your clickbait. But it's been as high as 8, you know what I mean, when we were opening and stuff. But you see how it's stuck at that 698. Let's pull up a Tesla chart. And if you go back, right, let's get a nice, maybe a 6-month chart will work us. You see how it's in this sideways pattern here? And you see how that tops at about 700? You got a double top there. Now you're kind of hitting another top of that level there, but that 700 seems to be a ceiling right now for Tesla. So we opened up an EV play this morning, and we opened it up just to share with you guys. We opened it up in Ford. We like Ford, $12 a share, 12 and a half bucks a share. Ford's really making moves, just like GM. But there was some great opportunity in the options with Ford. So if you're looking for a play, go ahead and check out the Ford. We suggest it's a nice little play for the EV. But anyways, guys, let's kind of talk about the market a little bit. The big talk, of course, is your infrastructure bill. Now, some people are saying it's not an infrastructure bill. Some people are saying it is. But one thing's for sure, this is going to be a knockdown, drag-out battle to get this bill passed. Already McConnell and them over the weekend, right, were professing their hate for this bill and all this stuff. And it makes sense. Even one of your Republican senators came out with a trimmed down version of it, right? About 660 as compared to the trillions. We're in billions, and it cuts about maybe half or a little bit more off that bill. But it focuses on your traditional infrastructure. And again, we're like our stimulus bill. We've got a lot of fluff in there. We've got a lot of pork in there. You can point fingers on this, but this is how Washington operates. Anytime they never let a good crisis go to waste. So it's interesting. The market banked a lot on the fact that infrastructure bill will be fact. But there's a big fight going. So we'll see how that affects the market going forward. We're still playing a little bit cautious. We added a trade this morning. But we're still being a little bit cautious. You know how things have been going lately. We get a big up day, a big down day. This is our second green day. So we'll see if there's some follow through to this. But other than that, stay the course, guys. You know, what I wanted to talk to you guys about was this today, the difference between a job and an investment. You see it all the time, guys, on the internet, right? All you see is a plethora of make money right now, turn your 100 into 1,000, blah, blah, blah. But really, if you think about it, the essence of what we do, and I want you guys to remember this next time you're rushing to chase a GameStop and it doesn't work out or something like that, why this is so important, the patience in your trading, the patience and the deliberate emotion. It's so important. It's the difference between a job and an investment. A job is income for now. Right? You use a job to pay your rent, you use a job, blah, blah, blah. You use a job to build your investment, right? An investment is a chip on your future. It's a bank on your future. So that should tell you right now, right? Stop chasing ambulances, stop chasing blinky lights, and build your portfolio smart, right? Get a good portion of that in great stocks, great balance sheets, great dividends, and let it gel. Let it gel. There's so many advantages to that, especially young people. You see it so much on Robinhood. They just don't teach this, and they need to. There's a right way to invest, and there's a wrong way. When you go that day trading and stuff route, all you're doing is it's a job. But remember, you go to work at a job, right? You're guaranteed going to get that paycheck in 2 weeks, right? You go to work in the stock market day trading, you might lose that paycheck in minutes. And that's the difference. Look at your investments like they're investments. Don't look at them as a way to get rich quick. Don't look at them as a way to, you're going to have moments. Look at my career. I've had moments. Look at the winter. I had 7 option plays in a row lost. But it didn't kill me. It didn't hurt me. And I'm still looking good and stuff like that. Why? Because I treat it like an investment. I have this part of my portfolio that I don't put in that kind of risk. Of course, you want to take some shots at some big money. And you'll see over the course of my career, the Brexit, right? Made big money on that, on the Trump election, GGP, right? Things like that. But you notice something about them. There's big space in between them, right? The rest of the time, you're just trying to build your portfolio. And you look at it like it's an investment, because that trade's not always there, guys. That day trade's not always there. Minus the COVID experience, right? The job, the paycheck's always there, right? On that day trade, the paycheck's not always there. And sometimes you're the one paying the check. Anyway, so look, guys, I just wanted to close with that. We're just past Easter. I hope you guys had a great Easter. A good 3-day weekend. The economy is starting to come back together, right? We're seeing good job reports. We're seeing good labor reports. We're starting to see good earnings from something besides Costco or Home Depot or Walmart, right? And it's a good time to reaffirm yourself to that program, to whatever your system is. I have a very definite system I follow religiously with my trading. You should have one too, okay? All right. And you follow it and you be patient. Remember, I know you guys are tired of hearing this, but the stock market is a vehicle for transferring wealth from the impatient to the patient. And it's been true since the first days of the stock market. All right, guys, it's Monday. Let's cut it here. We'll just do a quick update. Don't forget, tomorrow is Tuesday, so we'll have our stock of the week. Stock of the weeks are doing real good, right? Match just blew up after we released that. It's down a little bit today, but you know, it was up 6% on Thursday. It's down 1% on Monday. It's not a bad deal, and it's got that great balance sheet going with it. And of course, it's spring. Love is in the air. Anyways, guys, I'll see you guys tomorrow for the morning update. Let's see how this market kind of carries through here, okay? With this nice little gap up this morning and a little bit of it was a little tame there in that mid-morning session before I started this recording, but it looks like it's picking up a little bit more. The Dow's back up over 400 and stuff like that. All right, guys. So I'll see you guys in the morning. Tomorrow we'll have our stock of the week. As always, and they've all been very good picks. They've all been good winners and great additions to any portfolio. All right, guys, have a great Monday.